this is Nancy from Berkshire Hathaway, and thank you so much for joining us today. I have the privilege of speaking with Joe Coy from New American Funding. He's a great lending partner that I've been working with for quite a few years, and I love him because he's so knowledgeable and so easy to work with. So today what we're going to be talking about is, as a new home buyer, what are the steps you need to do to get pre-approved and when you should be doing your pre-approval. So hopefully by the end of this video, I hope as a new buyer, you're not, you don't feel like it's such a scary thing to go talk to a lender, and hope that you get a lot of value from this video. So Joe, thank you so much for your time.
Yeah, thanks for having me.
Yeah, and so, when you're starting out on your home buying journey, when is the right time to go talk to a lender, and how do you choose the right lender?
Sure. The right time is honestly immediately. It's always the first step when you're interested in buying a home. Before you start getting out there with a realtor and looking at properties, viewing properties, it's meeting with the mortgage lender, figuring out what you currently qualify for, what programs you qualify for, what that all entails as far as the total amount of money out of pocket, the monthly payment associated with different purchase prices. There's a lot of good information that the buyers walk away with after getting pre-approved. Makes them just a more knowledgeable buyer and the process a lot smoother. As far as meeting with the right lender, a lot of times, the realtors have been working with the same lender for many years. They've stuck with that lender because they've done a good job for their past clients with offering them competitive rates, the programs that were suitable for them, and really just getting the job done. So I would say the best lenders come from recommendations, whether it be from their realtor or maybe family and friends, but definitely recommendations.
And when you go talk to a lender, is there a cost associated with talking to a lender?
There's no cost associated whatsoever. The pre-approval is completely free. Even the credit report is free. So there's no cost associated whatsoever.
Okay, that's good to know. And, I'm sure a lot of buyers, they already have a bank account, so what's the difference about, speaking to a lender like yourself versus a lender that works at the bank? Which one's better?
Sure, I would say options, having access to more programs, especially for your first-time home buyers. The banks are pretty limited on the programs they have for first-time home buyers, but we have programs that can help with your down payment, your closing costs. They can help with different situations, financial situations that your clients might be in. So they have more options. We also are a direct lender with no overlays. So the pre-approval process is just a lot easier, and we're able to qualify them for a higher purchase price and just a lot more flexibility.
So, if you don't mind me asking, what does it mean by no overlays?
An overlay is, so most loans are agency loans, whether it's FHA, Fannie Mae, Freddie Mac, and those agencies set forth the bare minimum guidelines, and then lenders can add what's called overlays and make it more stricter to qualify. So generally speaking, your big box banks, they're looking for those A paper buyers, and they make it more difficult to qualify for a loan from them. Where a direct mortgage banker may have no overlays, they may be lending on the bare minimum guidelines, which makes it easier for your clients to qualify in general, but also qualify for a higher purchase price without having to jump through so many hoops to qualify.
Okay. When I'm looking at getting a loan, a lot of times I'm concerned with the interest rate. So how do you get the best interest rate? And is that really, really important when getting a loan, or what are some important things to consider when evaluating who to work with?
Sure, of course, interest rates are important. Interest rates are going to impact your monthly payment, and everyone's out there to get the best terms on their loan. Your interest rates are based on the program that you're using, the occupancy of the home, the FICO score. They're based on so many different factors. And I think that's important for the client to understand, because sometimes, they're looking at interest rates that they may see online, or an interest rate that their friend may have gotten on their loan, but the circumstances from one client to another client can vary greatly, and that can impact the rate. But overall, we're very competitive as far as interest rates are concerned.
And so, after talking to a lender and you're ready to get pre-approved, what does the buyer need to do? Like paperwork wise, is there anything that they need to prepare?
Yeah, they do. So the standard documents would be the last 2 years of taxes and W-2s, 1 month of pay stubs, 2 months of bank statements, driver's license. Those would be your standard documents. If a client owns a business or owns investment properties, there may be some additional documents that are required as well.
Okay. And how long is a pre-approval good for?
The pre-approval is generally good for as long as the credit report is good for, and the credit report is good for 120 days. Now, if a client loses their job or changes employers, or they increase their debts, or maybe decrease their assets, that could also have an impact on the pre-approval. But with all things being equal, the pre-approval will continue to remain at the same level.
Oh, okay. So let's say things like that do happen, but the buyer's still interested to purchase a home. So what do they need to do? Just communicate to you those changes and then you run a new pre-approval, or what happens?
Yeah, we're having that conversation with clients when we're pre-approving them, letting them know that to not make any major job changes without notifying their lender, or any major purchases on credit without notifying their lender. So they know if something were to come up that would potentially impact their pre-approval, to discuss that with their mortgage professional to see how that would impact how much they qualify for.
Okay. And does this, like doing the pre-approval, does it hurt my credit score?
Anytime you have a hard inquiry on your credit, it certainly has the possibility to decrease your FICO score. Usually the impact on your FICO score is pretty minimal. It's a common concern of clients, but things that impact your FICO score substantially are having like a late date on your credit report, maxing out your credit cards, collections. There's so many factors that go into determining a FICO score, but probably one of the least important or minor impacts on your credit score would be a credit inquiry.
Okay. So, let's say the 120 days pass. What do I do to renew my pre-approval if I'm still looking for a home? Do I need to do anything?
Yeah, I mean, we a lot of times we're asking the right questions as far as, has anything changed with your employment, with your income? Have you increased your debts or decreased your debts? We're running an additional credit report if the client's actively looking to purchase, and we're just updating their pre-approval in general, and
Okay.
seeing if there's been any changes.
And one thing I'd like to point out too is a lot of times when we are putting in offers, uh, the lender that we're working with actually is super important with to help us get the offer accepted. So do you mind also just talking about, common things that selling agents are asking you, or, the listing agent is asking you to let buyers know, how you're working with them to get the offer accepted?
Sure. So, listing agents, they're reviewing the purchase contract, of course, how much is the client offering, what down payment are they putting down, but they're also reviewing the pre-approval. So they want to make sure that the client and the lender has done all of their due diligence to make sure that the pre-approval is valid and accurate. So some of the things that they're looking for is a pre-approval letter, credit score disclosure, EU approval. Those are some of the most common documents, along with proof of funds. A lot of times they're calling the lender to ask a few questions, maybe to see if we verified employment, when was the last time we ran a credit report, how much does the client have for a down payment, where is it coming from, questions like that, to make sure that we've done our due diligence and to make sure that they're comfortable with accepting the client's offer. At the end of the day, they simply want to know and make sure that the client is able to perform and close that deal with them.
Mhm. Good to know. So in general, it just sounds like, talking to a lender, getting the pre-approval is pretty straightforward. Um,
Yeah.
so that's good to know. And I hope buyers listening to this video today realize, not to be scared about talking to a lender, and that it's one of the first places you should go. And hopefully that you find this video of value and learn something. So Thank you so much for tuning in and joining us today.